Hello guys, we have had a really tough week in the market, have news about Nikola Motors, Hyliion and Tertus acquisition merger is coming, Lyft has seen a recovery in their business. So in today's video I will talk about all that plus companies reporting earnings. Please smash that like button and subscribe since it really helps my channel out. If you haven't signed for Webull yet, make sure to do it and claim your 2 free stocks after depositing $100, which you can withdraw after you receive your 2 free stocks. So it is basically free money or instant gains, however you want to call it. The link for that is down in the description below. What a week! The S&P 500 ended down by 3.26%, the Dow Jones down 2.39%, the Nasdaq down 6.3%, being the worst week for Nasdaq since March as tech stocks continue struggling. We are likely to continue in a period of directionless volatility as bulls and bears wrestle between the strong Fed liquidity and improving economic backdrop and the continued uncertainty and elevated valuations. In my opinion, a correction was long overdue and it is healthy for the stock market, but we are getting to the point in where if it continues dropping will become a crash. Now, I'm sure that many of you already read about all the drama going around the EV company Nikola Motors. First, let me know in the comment section below if you are invested in this company, Nikola Motors stock, and what you think about all this. I have to start saying that, as I said in my video I posted 3 months ago talking about them, when they announced that they were going public, I explained I did not trust this company at all, mainly because they didn't have any final product. So in effect, I was not able to see a clear company or plan in which I could be interested to invest on. I also said that their idea is amazing and innovative, but that I was not going to invest in it because I did not feel really comfortable with their founder Trevor nor with what they had at the moment. I want to say that my thoughts have not changed at all. Now, 3 days ago, Hindenburg Research posted a very long article talking about how Nikola is basically a fraud. I will leave the link for that article in the description below since it's really long, and if you're interested to read about it. But what it basically says is that Trevor has managed to parlay these false statements made over a course of a decade into a $20 billion public company. He has inked partnership with some of the top auto companies in the world, all desperate to catch up to Tesla and to harness the EV wave. It also explains that Nikola staged the video for the Nikola One in Motion, which is their semi-truck, since they said in the article that the truck was not really working. Also, Nikola said in 2019 that they were going to revolutionize the battery industry, in which the battery never existed, and now Nikola plans to use General Motors battery technology instead. Long story short, this is an article explaining how and why Nikola is a fraud as a company. Is it true? Is it false? We can't really know until there is some extended investigation about it. There's a lot of people saying that Trevor is leaving the country, others that it is all false. I personally still do not trust Nikola at all as a company. If they really have the technology that they are saying and the trucks, they could easily destroy the short sellers by literally just doing a live or an unedited video to show that everything is true, but they haven't. So in my opinion, I still wouldn't invest in this company. As I said before, but I said that 3 months ago when the stock was at $60 per share, and a lot of people commented in the video that I was crazy. Obviously, because of all this drama, their stock dropped 17% since the article went live, but it has dropped more than 40% since Tuesday. Now that we're talking about the EV companies, let's talk about Hyliion. I did a video talking about it, and I have to say again that I like their idea, I like their company, already have a product functioning, and I think it has potential. Now, Hyliion and their SPAC, or Special Purpose Acquisition Company, called Tortoise Acquisition Corp, will vote on their merger on September 28th. Once the deal closes, the company will be traded in the stock market with the ticker symbol HYLN, and Hyliion will receive $560 million from the merger, which will be used to accelerate their product commercialization. Take into consideration that if you're investing in Tertus right now, you're investing in the acquisition company and not in Hyliion until they do the merger, as it happened with V2IQ and Nikola Motors. Now, SoftBank loses $12 billion in value on concerns over its big US tech bets. To enter into context, SoftBank bought billions of dollars in stock options betting on higher prices in tech stocks. SoftBank is a huge bank, and usually banks invest in things that are considered low risk. Obviously, investing billions of dollars in stock options is a very risky move, and investors did not like that at all. Even more when we all have seen how tech stocks have been climbing and climbing a lot since March, and their valuation were getting to unsustainable levels. Obviously, non-risk taking investors did not like that and started selling their SoftBank stock, causing a drop of more than 8% within a week. We all have seen how the whole stock market has been dropping, and mainly tech stocks, meaning that SoftBank might be losing a huge amount of money right now with those stock options. Lyft is one of the stocks that has actually been climbing in the past week, even with so much weakness in the stock market. You guys know that I'm investing in this company, and it has been in my stocks to buy for a while now, since I think it is at a very good price. Their stock is up 7.44%. It has a market cap of $9.6 billion. The stock has been up basically because they have seen a recovery in their business. They said that their rights rose 7.3% in August in comparison to July. Obviously, their rights are still down a lot in comparison to the same month last year, but hey, we're in a pandemic going on, and a 7% plus increase within a month is an improvement. They also said that they spent less money on driver incentives last month since more drivers returned to its ride-hailing app. Still, I'm waiting to see what's gonna happen in November with the elections in California. So last week we had good earnings from Peloton, Slack, Chewy, and more. First, Chewy. Their sales grew 47% year over year to $1.7 billion with a net loss of $32.8 million, which is a huge improvement from last year, in which they reported $82.8 million in net loss. Still, their adjusted EBITDA, which is earnings before interest, depreciation, tax, and amortization, was $15.45 million, which, as you can see, last year it was a loss as well, so it actually improved 157% year over year. So excellent earnings and improvement in my opinion for the company. So the second company is Peloton. They crushed estimates as sales surged 172% in the fourth quarter for the fiscal year, as their high-tech bike and treadmill became the hottest equipment for people since we are mainly working out at home during the pandemic. Also, their fiscal year, they reported a revenue of $1.82 billion, which is an increase of almost 100% year over year. Obviously, this is another company that has benefited from the pandemic, since a lot of people that are used to working out at gyms couldn't and needed to find a way to work out comfortably at home. The third company that reported earnings was Slack. Even though they beat expectations since they reported a break even while analysts were expecting a loss of 0.3 cents per share, and also reported a revenue of $215.9 million while analysts were expecting $209 million, their stock fell almost 20% because their revenue growth for the quarter was 48%, which is less than 50% year over year in the last 2 quarters. Obviously, in my opinion, 48% increase year over year is amazing, but apparently investors were expecting a higher growth due to the pandemic, since apps like Zoom have shown massive growth every quarter. Now, next week we have some companies reporting earnings such as FedEx, Lennar, and Adobe. First, FedEx. As e-commerce has seen a massive growth during the pandemic, I would expect that companies like FedEx and UPS do the same. Still, analysts are expecting them to report a revenue growth of only 2.90% for the quarter and 4% for the whole year. Their competitor UPS reported a revenue growth of 13%, so I would expect FedEx to at least beat analyst expectations for the quarter. Still, analyst projections for the stock price within the next 12 months are to rise 28.9% or to drop 57%, which could be huge for the company. The next company is Adobe. Something I like a lot about Adobe is the way they are improving their business by improving their cloud services, as cloud is one of the high growth aspects in every single company right now. For Adobe, they offer more than 20 apps on their cloud, so you can be able to edit your pictures, video, or anything else in your tablet, phone, or computer whenever you want at any place. Analysts are expecting them to report a revenue growth of 11.30% for the quarter and 14% for the whole 2020. Also, within the next 12 months, analysts are forecasting the stock price to go either up 21.9% or down by 20.5%. This is a company that has an excellent growth year over year, and I think they still have a lot of room to grow even more as a company. Hope you enjoyed this video. Please smash that like button and subscribe since it really helps my channel out. Do not forget that I have a completely free Discord group chat. The link for that is down in the description below if you want to join. Thank you and see you next time.